Good afternoon, everybody. Today is Wednesday, the 28th of December, 2011. Let's take a look at these markets. By the way, just so you know, I will not be in tomorrow or Friday. Be taking a couple extra days here before the new year. And, the volume's actually obviously been very low. It picked up a little bit today on the downside here. And we came down right to kind of a critical level for some of these markets. Perhaps we go a little bit further down to this trend line in the S&P 500, but we've obviously had some trouble in here recently, just at this 127 and a half-ish area, and that's the basis of this inverted head and shoulders pattern. We're now kind of coming down and creating hopefully what becomes another higher low, and this pattern is going to maybe morph into an ascending triangle here, but it still is constructive. We've got a rising 10, 20, and 50-day moving average. But it's just not clear yet that we should be buyers in this area. Obviously, we closed below that 5-day moving average, and the volume came, or I'm sorry, the selling came in quickly here. We broke this pattern of lower highs and lower lows and came right down to that 5-day moving average. Tried to stabilize in there, obviously didn't hold up in that area, and we were below the volume weighted average price for just about the entire session. In fact, we were below it the entire session. So slicing down through S2, you can see that we pay a lot of attention to these levels, but they're not always perfect. We did get a bounce in that level, but after that failure, obviously we did continue lower, and now we just have to monitor this market and see what it wants to do here. Is it going to come down to this trend line down near 122 and a half? Hopefully it doesn't, but 123 is 2280 to 123 is a potential level of support for this market, and just can't go in here and buy this. We need to see at least the 125 and a half level taken out, I think, before getting involved on the long side. You can see that's about where we have today's volume weighted average price as well. But we're down for the year once again in the S&P 500. It's kind of comical how often we've been going back and forth between there. And the weekly chart, really nothing's changed in here. The volume weighted average price, we're back below it again. We're back below that 200-day moving average again. So closing above, we've seen on three separate occasions, this being the third occasion that we have closed above that 200-day moving average, but it's still declining. It's still kind of neutralizing here and building some energy, hopefully for a break higher at some point here. But right now, have to kind of let this market settle in a little bit and see what it wants to do. The Nasdaq was down a little bit more than 1% as well, 1.16%, down through that 56 level, and we spoke about $55.60. Well, we closed right at $55.59. So I don't think that we have to be concerned yet about this downside. And here, perhaps, let's take a look at the 65-minute time frame actually to frame it a little bit better. But here we could be headed for this trend line as well. This market's building energy within this triangle here that we see that is behaving really as an obstacle on both in both directions. So perhaps we head down below 55, but again, that 56 has been a big level. We closed below it once again. The range is tightening, and you don't want to be a buyer yet just because we're at a 5-day moving average or anything like that. We're breaking down a little bit. We're consolidating. We have to give this market time to decide whether it wants to continue to hold within this triangle and then move higher, or if we're going to get a larger scale breakdown. It's just not clear. The Russell 2000 was down 1.8%. So obviously this market's had some pretty strong resistance near that 75 level. It's back below that 150-day moving average once again, and the 50-day moving average is just below us here at about $72.70. Looking at a 65-minute time frame, this has been the resistance level, 75 and a half basically. And what we were looking for in terms of this inverted head and shoulders pattern is kind of morphing away from that pattern as we have this neckline here. Hopefully what we can see happen is maybe about that 72-ish level holds. That would kind of keep us above this trend line as well. So we get down as low as 72, that wouldn't be the best scenario, but that's still somewhat constructive here, and would say that perhaps we can continue to build for a break of that 75 and a half level. But right now we've got this little pattern of lower highs and lower lows, so it doesn't make sense to purchase. That's the main point. Semiconductors back below that 30 and a half level in here as well. They got rejected, as we know that level had further importance assigned to it because it's the location of that 50-day moving average. So, kind of the same thing in here. Range tightening for the semiconductors and just no resolution right yet. We're at the end of the year here. Like I said, I'm not going to be in tomorrow. I think a lot of people will probably kind of start drifting off unless you have to be here for some reason. And it probably, it makes more sense right now just because of the low volume, and we'll talk about that on the stocks in a moment. The volume has been so low in these individual names that you want to stay focused more on the uh, indexes. And you look at these semiconductors, only 500,000 shares today. I mean, the average daily volume in the semiconductors has been dropping dramatically. It's only down to 4.2 million shares. So that's not even a good liquid ETF, really, if you think about it. 500,000 shares isn't much at all. Financials trade, 4.2 million shares, or is that 42 million shares, I suppose. So still plenty liquid here on these financials. And this is what's, the essence of trend here. You could draw a trend line off the top, but what represents the essence of trend right now is off of this trend, off of these peaks, and we have this higher low. We're back down. I was talking about 1295. 1280 is the big level. I didn't really want to see us coming back down to that level. Hopefully, it can hold. If we break down through it slightly, maybe I'm sorry, maybe this trend line holds it, but you got to be careful in here. It just, we've got the short term. We broke some decent, support from the last couple days, and we now have a lower high and a lower low in here. So you just can't be going into it, hoping that it's going to hold as support. That's not the way, that's not where you find your odds. You got to let this thing settle out a little bit, and nothing dramatic is going to happen on January 1st or January 3rd in this case. A lot of people look for, well, it's going to be a new year, and this, and that sort of thing. A lot of times we get real false movement towards the end of the year. The individual stocks that we were looking at, that is, if we start out strong for a couple days, then we'll have a strong reversal, or vice versa. That happens a lot of times, it seems, at the beginning of the year. This Dicom industry is still consolidating nicely. We do still have that little pattern though we had spoken about of the lower highs and lower lows. I think we want to see it at least above 2110 or so. If we take a look at the 4-day volume weighted average price, we are just below it. So probably about 21. Set an alert about 21, and then look to be buying on some strength, and maybe even needs to get back above one of these highs. But right now, it doesn't make sense to own this stock long. We've got the short-term lower highs and lower lows, so you want to stand aside until the market tells us that it's making a higher high, and then set the stop underneath a higher low. So maybe 2105 with a stop near about $20.75 would be a way to play that. Glue, we were looking for the potential to break some resistance up in here near about $3.35. Obviously, that didn't occur. The stock, was weak yesterday. We wanted it to come back up and set an alert. It broke back down, so I don't think there's any reason to be looking at this one on the long side tomorrow. It doesn't look like it's going to happen. Groupon, from the beginning, it had that little spike. Looked like it was going to try to hold the 2-day volume weighted average price in here, but it was very short lived. There was a big spread in there, and then it just kind of broke down from there. So Groupon, if we look again at the volume weighted average price since the stock began trading publicly, we're basically right on that level. So maybe you want to keep an eye on Groupon, but it just seems like it broke down a little bit too hard today. That this was the bigger level that we were looking for it to break back above, and it didn't do that. So I don't think you have to keep a close eye on Groupon tomorrow. INT, here's another stock where we're looking for a pullback and then a push above the highs. It broke down. It doesn't look like it's ready to recover. I would not spend time watching this stock tomorrow. Intuit, kind of same thing. We were looking for this $53.50 level to break. It never happened, of course. When we had a gap lower, there's no harm done here because we didn't, there was no reason to participate. It sold off instead, and right now it's going to need more recovery than it looks like it's capable of doing in the next day or two to be a good long side trade. Men's Warehouse tried to get going in here this morning, and I believe some people took it as it got back above that volume weighted average price. So it opened a little lower down to the daily pivot, and but it got back down quickly through the volume weighted average price, and hopefully not holding it here because it just doesn't make sense to after they break down. I think you could keep an eye on it, but keep in mind you've got the 2-day volume weighted average price up at about $32.90. If it's going to have to at least get back above there. Trimble, nothing happened in here. We've seen the resistance at 45.05, 45.04 was actually the number, if you recall. We wanted to buy it above that. We were encouraged yesterday because we had this market coming back up to that level, and then it looked like a nice consolidation that if it broke through, then we would have this higher low above a rising 5-day moving average. But instead, the stock failed. I would not be watching this stock tomorrow. It doesn't look like there's good odds in there. CTSH did break down. I didn't trade this on the short side. I didn't really see anyone talking about it, but it gapped up a little bit, or had a little bit of strength early on, up to the pivot in the 2-day volume weighted average price, and then as it got back down below VWAP, immediately it sold off beyond daily S2. So if you did get involved, good trading in there, and the idea is not to catch every single one of these trades, but to catch the ones that make most sense to you based on what the market's doing. I would say worst case stop at this point if you're in it, about $62.70. Lazy Boy kind of held up. We were looking at 12.20, looking to buy it above $12.20. So again, here's another case of doing nothing was better than trying to force the trade, and when the price action didn't confirm that strength. So I think you can still set an alert probably at $12.15, and if it gets up through that 12.20, I think you want to set a stop at whatever is the most relevant high at that time. Right now it looks about $11.75 is where that would go. Nuance, another one that was holding underneath some resistance. It got up to that level this morning and then sold off. There's no reason to be involved in Nuance right now. As we know, 25 has been an important level for this stock. We're kind of back below it. It's not busted, but it is in need of repair. I'd say it's wounded and probably not ready to move tomorrow. Zynga was, kind of broke down quickly. Here this morning, it came down actually the daily to the 2-day volume weighted average price. It got back above the VWAP. I got involved in some and was out pretty quickly with a small loss. But Zynga now, you look at the volume weighted average price since the IPO. It's up at about $9.65. It's not holding. It didn't hold its gains today, so you can keep it on your board, but I don't think there's a good reason to watch it closely tomorrow. Last one I would suggest looking at, I looked at a bunch of stocks here and just wasn't able to find anything, is Dexo. It's traded 600,000 shares today. As we know, it's been holding this rising 20-day moving average, and we've got this bigger level at about $1.55, $1.58, $1.57, $1.58, but it is holding on. It's trading decent enough volume to consider in this low volume environment. That is, it traded 605,000 shares today, but I think that the majority of your trading ought to be right now in the ETFs and the levered ETFs, and probably not the semiconductors, but we've got this higher low, really at about 145. If you get involved in this, don't let it drop below 145 and continue to hold, because it is a garbage little stock, but it could get moving higher. So that's going to do it. I'll have a video for you probably on Monday, and looking forward to starting out a year fresh, and hopefully we have some better trending opportunities in 2012. Enjoy the next few days off, and don't get caught up in some of these little illiquid stocks. Thanks.